Despite the escalation of the Middle East conflict, because I tracked data in October, and you can see that the stress level in the money market is below the long-term average, which is represented by the orange line. And even if you were to look at the breakdown by US, Eurozone, it is nowhere near what we have experienced in COVID and also the Russia-Ukraine invasion. The banking volatility during the March-April period, it was almost a non-event from the investors' perspective. In terms of global growth, we do see a lot of improvement. But if you look at the Oxford Economic forecast for 2024, pretty much every market is coming down to the level that central bank is comfortable with. And US market is very resilient at 2.1%, although everyone is talking about a recession next year, but currently we are not seeing that signs of US heading towards a recession because the job market is still very strong. Global or property, they have been consistently, over the long term, basically outperforming your equity, your bonds. If you have chosen to go in to during a crisis period, your return will be improved from 20% to 30%. And there is a much higher chance of you getting it right, just because you've been investing throughout the pandemic or throughout the crisis period. The chance of you outperforming people who do not choose to invest during a crisis will be a lot higher. The life poll result shows that almost half of the people are looking at living sector. So living sector meaning whether it's residential rental or senior living or student accommodation, they all belong to the living sector. And out of these people who chose the living sector, you can see the breakdown. It's quite apparent. People are looking for multifamily, so that's basically the rental apartments because of the income, and they tend to be counter-cyclical, especially for student housing. The non-traditional, including the living sector, is about 38%, but we do see from the portfolio optimization analysis, we do see a cutback in office retail and an increase in the non-traditional living sector. So we fast forward to 2022, non-traditional including living sector has continued to gain traction. Based on our forecast, by 2027, non-traditional asset is going to be almost half. The living sector is the only one that has outperformed the rest of the asset classes, so office, industrial, retail.